Mm-hmm. Mm-hmm.
Woo! Welcome
Let's go.
back, traders. How are we
I wake up to a
doing
little
today? We
bit
have
of
an
drool on my
absolutely
pillow, feel like
beautiful
it's
video for you guys coming in to GameStop. A post from Larry Chang, just going over that really quick, is GameStop and the GME warrants actually look semi-bullish this week, and AMC seen a little bit more of consolidative action. So if you guys are interested in this, right, I just want to shout out the 13 new subscribers, baby, as we stay on a roll. I think we're on like a 21-day video posting streak. So slap the like button, punch the subscribe button, and let's get straight into it, right? Ryan Cohen, this is what Larry Chang says. Ryan Cohen withdraws CEO performance award to focus company on eBay. Now, we knew that, right? That came out a couple days ago, but just hearing it from a board director like Larry Chang is pretty significant. Ryan Cohen announces $500 million personal investment in an eBay transaction. That is insane, right? Considering he is using his own freaking money to push forth this eBay acquisition, and then GameStop projects fiscal year 26 adjusted EBITDA in excess of $600 million, guys. That is also insane, right? Hashtag proud. He should be, right? Genuinely, when you look at where GameStop came from and where it is today, just the complete 180 in the fundamental business is actually kind of inspiring, right? When you see this stock that has been shorted to the absolute dirt. I think it was 130, 140% of the company naked short sold. And then now you look at where it is today, absolutely booming, right? And we'll get into that in a second, seeing a little bit of a bull flag here on GME. We're going to start with AMC. So without further notice, right, let's jump into the charts because you're doing something on the intraday that I think is important for you guys to know. Just looking at the chart here, you can see a very clear head and shoulders formation. Now, we've covered this multiple times, and you rejected right around that 122 area, right? You failed to close above it. You closed at 204 on this candle. You closed this candle at 216, right? So closing this candle above 222, in my opinion, right, above this wick would invalidate your bearish thesis. But what I think might be occurring here is a potential short trap or a bear trap, traders, and this is all going to depend on whether or not you can close above 222, but it is actually looking kind of nice here. When you look at the indicators, right, don't look at the chart looks disgusting, like a head and shoulders, but the indicators are slowly but surely starting to slope back up, showing a lot of bearish momentum coming to an end here, right? You had the touch of bullish divergence, which you've seen a nice little peaky weeky on the charts, up 31%. That's amazing, right? Because we called that every step of the way. But what you're watching here is a downsloping volume resistance level here. I expect this to break at some point within the next 2 to 3 days, right? If you see that occur, you should see this thing make a nasty move either to the upside or the downside. Now, what gives me conviction, right, what makes me believe that this might be a big fat bear trap is the fact that you have an inverted head and shoulders, right? The beautiful, the one, the only, you have a shoulder, head, and then your right shoulder is beginning to form here, chopping around as you have this uptrend on the MACD, right? You're seeing that the bearish momentum is slowing as the volume slows down, and you're coming to a point on the RSI that's going to be very freaking important, right? Whether or not you can cross this RSI band and the 50 line on the 4-hour chart. This is a typical swing trade positioning here. And if you can break this, right, you can see AMC go on another one of those rippies. What you're going to need to see first, in my opinion, is a cross of the 4-hour MACD, guys. Every single time you've gotten a cross, right? This is June 2026. Got a cross from this candle right here. Went up 52%. This cross down here, it was May 19th, right? May 19th, you got a cross and you went up 60%. And then this cross all the way back here, right? This freaking OG cross at 94 cents on the 4-hour chart took you upwards of 102%. So your last 3 crosses, traders, have giving you 50% or more upwards to 100% on the stock, and you're starting to do it again, right? You're curling up. You're showing the bearish momentum slow down here. So you're actually giving the bulls a time to step in, which makes me believe that this may be a little bit of a bear trap here. Now, it won't matter if you stay beneath this up sloping support, new resistance, right? You lost it here, you retested it, and then you dumped from that rejection 21%. That's just a textbook rejection on the stock. And you have the opportunity now to either trade back into it, right? Because the technical profit target from this inverted head and shoulders is the full length of the V line on top of the neckline, and that takes you straight into your gap fill traders. So at some point, if this bullish part of this opportunity plays out, you will have filled the gap, currently sitting at 274 traders. So there is the opportunity for this. Of course, that's the opportunity and the situation that we freaking want, traders. But what is also very possible is that this head and shoulders plays out, right? And I think you should position, I think you should be prepared, right? Do your own due diligence. I'm not a financial advisor. I don't give financial advice, but I think you should really study the stock, take a little peeky-weeky on the charts and see which way you think it's going to go. I have a bullish bias because of the downsloping volume, as well as this inverted head and shoulders, that you may see this thing bounce off the 200-day EMA and go for a little bit of a rippy. But you never know with AMC. You really freaking don't. And so that's why I say be cautious and never bet more than you're willing to lose, right? Theoretically, though, the profit target from this is right around that 290 territory. Another scenario that we don't want, that would be a bearish one, is if you come back up here, right? Everyone's over the moon. Everyone's freaking thrilled. You tap the gap fill, and then you come back down, right? Does anyone know what that is? Put in the comment, put in the chat, right? That is a double freaking top. And that gives you the exact same scenario, right? A drop down to 105. Now, the head and shoulders formation, as well as the double top, would give you a profit target of about 105 on the stock. This happening on the shorter time frame would accomplish these gap fills at 112 and would reset your RSI on the weekly time frame, most likely all the way back to oversold territory. Now, that's good because you're making a technical higher low before seeing this thing giving all this freaking territory to run back up and make another higher high. Sorry. The Wendy's is getting me. All those tendies. Which brings me to my next point on the weekly time frame. There's two things I want to talk about here. And on the weekly time frame, right, get rid of some of these trend lines, is you still have this uptrend sitting at right around 160 to 175, which is key to this thing staying afloat, right? Staying above this uptrend would give you a 3 rising valleys, which is one of the most bullish reversal signals in the market, right? Showing that the bottom would be in on AMC stock potentially. As well as this possible test of the 50 line and the RSI band has not happened on this stock, traders, since all the way back here, right? And you weren't retesting the 50 line, but look at the way the stock came from oversold above the RSI band and then retests it, right? And then look at the move that followed. You had the most volume on this candlestick formation as you saw the full extension upwards of, from the retest, 300%, right? 300% off of that rippy. I would not be surprised to see something happen here that could mirror that kind of move, right? If you see a bullish retest of the RSI band and the 50 line on the weekly time frame, anything is possible, right? You've already proven a change in behavior on the stock, holding above the 200-day EMA for an elongated period of time. Ever since you first crossed above it, right, back here, June 1st, you've now been flirting with it for the last month of price action, traders. That has literally never happened in the entire bearish existence of AMC. You've only done that during the meme stock craze back in 2021. So what are we looking like? Right? On the daily time frame, you have a bearish spinning top candle, which is just continuation, which in my eyes would mean you probably just continue to consolidate here until you see a move up or down. You are literally pincered between one of the most important spots you've been in the entire freaking charts history, guys. Just look at it. Look at that, right? Pinched between the 9-day EMA to your upside and then the 200 to your downside. I expect this thing to see a violent move either up or down because of this fact, right? Whenever you see this happen, if you are bullish AMC, you want to see this thing succeed. You need to see it do it now, right? And although a rip down to 112 to fill this gap would not be the end of the world, it would kill the short-term momentum in which you could get this golden cross on the daily time frame for the first time since February 1st of 2021, traders. And we all know what happened after February 1st of 2021. You had March, April, May, June, and June was the catalyst, right? You had all of the options expiring. You had the buildup of just higher highs and higher lows on the stock until eventually, right, the shorts could not hold it back any longer. You saw the freaking stock burst, right? And if you can consecutively close above the 200-day EMA, continuing to grind and ride it like a worm, guys, it's very, very possible you could do the same thing here. Of course, not financial advice, but it just looks so freaking good, guys. On the daily time frame, holding the 200-day EMA, you need to break 222 and hold above $2 freaking bucks, guys. Like we said, not financial advice, but the 4-hour chart, you can see very clearly shoulder, head, right shoulder, and you're holding the 200-day EMA on the 4-hour time frame. That is bullish, but you need to see some kind of reaction, which you're seeing on the 4-hour, up 2.15%, right? This is now do or die for this inverted head and shoulders, right? You could see a little bit more consolidation, but eventually you need to see this thing be convicted up or convicted down. So we're going to probably find that out within the next couple of hours, right? On the weekly time frame, okay? Weekly time frame, this shows a good example of being pincered, right? The stock is in a standstill between bulls and bears. You are holding the 9-day EMA on the weekly, but closing below it on the 50, which sits at 220, the 9-day at 199.9, right? So you're literally just trading between the two. Oftentimes when you see the 9 on the weekly, guys, trade above the 50. This is the kind of momentum cross that we need to see higher prices, right? Just take a little peeky weeky at the chart, zoom all the way out, right? And just look at me. Look, you can look at me if you want, but just look with me, right? And see the last time you crossed below, minus 15%, minus 10%, 12%, 16%, right? That's the kind of bearish momentum that came from across down, across up, only has happened back in 2021 of January, guys, during the squeeze up 277%. So these crosses typically come at key points of times in which you're proving, oh yeah, I'm bullish, I'm ready to run, I'm ready to ride this thing. And truthfully, traders, you can see throughout the entire markup phase of this golden cross, you stayed above that weekly 9 the entire way there. You've closed every single candle on this time frame during that initial squeeze, which I've not actually seen until now. Pretty much marked you as bullish. You got above the 9 through the 200, and that is what sent you up 116%, right? That is the bullish catalyst that really sent you. Now look at where you're at today, right? You have the 200 sloping down around 20, and this is where it gets kind of into those fractal traders. I don't believe in fractal trading. I think it's dumb. But if you could see this thing cross above the 50, you could see an impulsive move up to 566 where you have that very, very large set of resistance as well as your point of control, traders. You have a lot of volume that's been traded in this last couple of years in this area. So I would expect some resistance around that, but I would not be surprised to see that kind of impulsive move. And then you could see that kind of ride the wave, right? Ride the wave, retest $10, your previous all-time low. And then if you got ever close to this freaking 200, right? That is where you see this kind of gamma squeeze event occur, right? Just like you, having the hiccups, just like you had back here. right? Get above the 50 from the 9. Huge momentum, holds it, holds it, holds it, holds it. Gamma, 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 and squeeze, right? That's what we're watching for the macro time frame on AMC. I'm absolutely jacked. I'm bullish as all get out. And whether or not we go up or down in the short term does not matter to me. Right? I'll still be covering AMC. I think that's all we got for Amy, guys. Make sure to slap the like button, slap the subscribe button. Let's get into GameStop now. As you can see, doing a little bit of bull flagging here, which is significantly bullish, right? After all of this sideways consolidation within this falling wedge, look at where you are today, right? You're actually bull flagging, a little bit of a bullish triangle formation here, if you will. But theoretically, right, the profit target is the full length of that flagpole placed on top, and that brings you right around to that 2350 territory, or pretty much directly to this high, right? Testing that high would be pretty significant. And furthermore, on the daily, guys, whoops, that's the 1 hour. On the freaking daily for GameStop, you've gapped up a little bit. You're putting in a green doji, and this bullish engulfing candlestick is coming to full fruition. Now, the potential for you to actually make that squeezy, it's not really squeezy, but that markup target would lead you directly into your 200-day EMA. That's going to be an important test because that's exactly at 2313, right? Look at your rejection of it here after the death cross. Typically, GameStop will see one test of this death cross, and the second to third, you'll see some kind of breakthrough and then lead to new price action, right? Look at it, what happened back here, right? Death cross, you see an initial test into it and a failure swing, and then you see that kind of bullish momentum build until you pop above it, right? That's a great example of what we're having right now, right? You see that death cross happen May 20th of 2026. You see an initial gap up, right? Crazy boom, boom to go test it, a rejection into a failure swing. And now you're doing this test again. So truthfully, what's going to matter for GameStop, whether or not you can break above this thing on the daily time frame coming into the next couple of weeks, right? So I'll be keeping my eyes on GME. You have some very, very low volume comparatively, so anything's really possible here. You need to see the fundamental news break, right? You need to see Ryan Cohen continue to egg on the shareholders of eBay to come to the freaking dark side, guys. Come to GME, come be profitable and maximize your shareholder value, right? And I think that's the message that he's trying to smash across for those investors, right? Because it's not going to be the management that does it. It's just freaking not. On the weekly time frame, take a little peeky weeky at the weekly chart. You are doing something very, very bullish, which is you're seeing 1, 2, 3 weeks in a row of bearish momentum slowing down, right? You've seen the volume in the stock be depleted ever since this gap down right here. But furthermore, traders, you've seen on the MACD the last 3 weeks that bearish momentum slow down. And you're starting to see the lower band curl its way up. And typically this is when you see your bottom make its move, right? You had the same thing here. Bottom began to curl up here. And then that is what led you to get that weekly MACD cross. And then as soon as you got it, 9% move on the weekly, and then 4% move, and then a 5% move, right? That's the kind of momentum swing we want to see from GME to go and mark that higher high. But it's probably going to come off of some fundamental news. So until you get that right, it's pretty hard to measure. Now, I have these all lined up. These vertical lines are your last few weekly MACD crosses, just to give you guys some validation on this trade for GME, right? Look at this one back in September, right? 10%, 5%, 1%, and then a blow off top and a huge rejection off of that, right? This one right here came off of a nice rip May 2nd. You saw a 0.2%, 3%, 16%, a blow off top, and then a sharp rejection, okay? Same thing right here. Solid move up, and then sharp rejection. So you've been consolidating the last 2 years within this bullish channel, and that current resistance is right around $47. That breaks you out of your macro bullish pennant, which I've been significantly just jacked on, right? And I do believe you're going to break out of that at some point. It's just been a lot of sideways price action in the meantime, right? All right, let's jump into the GME warrants. As the GME warrants, guys, I love covering this for my man Only in Paradise, but in case anyone is wondering, right, this weekly doji candle could not have come in a more critical time in the stock's history, right? It's a relatively short-lived stock, right? It's only existed since October 10th of 2025, but since then you've made a falling broadening wedge and you tapped it perfectly, guys. We called for this and you saw a nice reaction out of the stock. And since then, you've seen a little bit of a rejection, but you do have the solid opportunity here if the GME warrants can finish green, right? When I had this chart pulled up last, it was actually finishing relatively green above this, or right around the top of this wick, right around, what was that? 280, right? The high of the day is 288 on the GME warrants. But what you want to see, guys, is you want to see this close green and get a morning star formation. This 3 candlestick formation, in my opinion, would mark the bottom in the GME warrants markdown, right? Because you've done nothing, traders, but go down 41% the last 49 days. That's disgusting kinds of price action. And I think getting this morning star would confirm my bullish bias that this is going to be your bottom until you swing higher into these multiple moving averages and downsloping resistance. But until then, guys, we literally will not know what this thing is going to do. You need to see the weekly candle close bullish, right? You need to see that momentum carry over. And to hopefully, oh my God, I'm hiccuping like crazy. And hopefully, right, test this 200-day EMA in the weekly and avoid this cross down of the 9 through the 200. That would most likely bring you all the way back down to the bottom side of this support, right? And potentially to test your previous all-time low at 225, guys. But just like I said, we're here every single day covering AMC, GameStop, and the GME warrants. I like to cover the broader market and crypto as well. Just it's been doing a whole lot of nothing. Shout out again to everyone that's been a part of the crew, right? You guys have joined the Discord, and we're making a real lasting impact in the community. I freaking love it, and I'm going to continue to cover these stocks. So if you guys found this interesting, found some value in this, you know what to do. Until next time, guys. The best is yet to come. Much love and peace.